Good morning, everybody. Looking forward to bringing you all together virtually this morning. Yeah, really looking forward to the discussion today with OakNorth, with Total Fitness, with Mamas and Papas, and also Whitecap Consulting. My name's Joe Roche. I'm General Manager of FinTech North. And I'd just like to take 5 minutes or so at the start of this webinar to just explain a little bit about the work that we do at FinTech North and also give you an idea of the activity that we see happening in the Northern FinTech ecosystem as well. And then I'll be handing over to our first speaker, Stuart Howarth from OakNorth, Director of Debt Finance, and he'll be saying a few words on behalf of our awesome sponsor organisation. Yeah, Manchester's very own fintech unicorn, OakNorth. So delighted to be working with the team at OakNorth this year. We're collaborating on a number of events, including this webinar, but also our Manchester conference, which is happening later on in the year in November. So I'll get going. I'll just share my screen. Hopefully everybody can see my slides. Like I said, massive thank you to the team at OakNorth. Really looking forward to getting stuck into this topic, how to scale smart. A topic right at the top of everybody's agenda at the moment as we look to drive growth in our businesses and in our economy as well. And we believe strongly that fintechs like OakNorth can really be an enabler for that growth. So yeah, as I've said, my name's Joe. I'm General Manager of FinTech North. If you'd like to reach out to me or my colleagues, info@fintechnorth.uk, there is our general email address. Please do get in touch if you'd like to discuss speaking opportunities, sponsorship opportunities, expanding into the north of England as a whole. As you're about to find out, it's a really exciting ecosystem to be part of. So yeah, please reach out if you've got any questions or you have a general thought or inquiry. So FinTech North, as an organisation, we exist primarily to bring the northern fintech community together. Since 2016, we've been running events, conferences, webinars, seminars, trade missions, socials, you name it, a wide variety of face-to-face events as our primary lever for achieving these objectives. All of our activity is done to promote the North as a centre of excellence in fintech. We try and develop the sector as best as we can. So that might mean supporting entrepreneurs, startups, scale-ups with business development opportunities or profile opportunities. It might also mean working on relevant initiatives and things like our strategy, which I'll touch upon a little bit later on. Developing things like skills and international trade opportunities for the north of England. And I think the final point for us is one of connectivity. We try to be a conduit between the regional and the national, so to make sure that entrepreneurs on the ground in places like Liverpool, Manchester, Newcastle, Leeds, Durham, York, Hull, like Sunderland, you name it. All of those entrepreneurs are aware of things that are happening at a national and indeed international level, and vice versa, making sure that some of the UK's main, fintech stakeholders or organisations like Innovate Finance or perhaps the Bank of England or the FCA are aware of what's happening at a local level as well. Primarily, though, the main thing with FinTech North is our face-to-face community. It's you, it's everybody who's joining our calls, who joins our events. Yeah, you're a fantastic, collaborative, supportive bunch to bring together. Generally a knowledgeable and passionate senior community of fintech aficionados, and we absolutely love our work, bringing you together through events, conferences, trade missions, all of those activities that I've mentioned there. I always like to highlight on this slide that we're entirely self-funded as an organisation. We're not a public sector body, we're a private entity. We rely on the support of these like-minded organisations to come on board, sponsor an event, take a partnership, take a sponsorship. And huge thank you to all of those organisations that you see on screen right now. And as always, want to highlight that we can add value at different stages of every company's life cycle. So on here, there's organizations who are startups, who are scale-ups, who are instantly recognizable global brands. We can add value to all of those organizations. Special thanks, of course, to all of our supporters, all of our partners, and of course, our strategic partners as well. So hopefully that's given you an idea of what FinTech North is all about. Just quickly on FinTech in the North for a second. Recently, there was a report launched into the north of England as a whole, as one ecosystem, done by the team at Whitecap Consulting. So Feluso's colleagues, Feluso speaking on the webinar a little bit later on. Yeah, the team at Whitecap Consulting brought together all of the previously individual regions of the north and amalgamated them into one region, which is really exciting for us at FinTech North because we've always treated the north as one region. And some of the findings from that report, which was launched at the start of the summer this year, make for some really encouraging reading. There's around about 400 fintech firms in the north of England. The sector in the north is generating £5 billion GVA every year for the UK economy. There are over 40 universities in the north of England, so unparalleled access to talent, lower overheads, really high quality of life. All of these things are really encouraging for our sector. And thinking about the individual city regions and ecosystems that we support, there's a kind of real sort of deep specialism in a few different areas. For example, Liverpool's really strong on wealth tech and insurtech. Greater Manchester's really strong on banking and payments. The Leeds City region, again, really strong on lending, banking, and reg tech. And up in the northeast, there's a really strong payments expertise and a bit of an innovation corridor between Newcastle and Durham. Those of you who've heard me speak before will know I can kind of wax lyrical about this for hours on end, and I can go into much more detail about each of those ecosystems. But hopefully that gives you an idea of some of the activity that we see happening across the north. I mentioned some of the other initiatives that we work on at FinTech North. We took a decision last year to kind of implement two new pillars of our strategy. So in addition to all of the fantastic events that we run, we wanted to work in a concerted way across international trade and skills as two particular pillars of that strategy. International trade is probably a bit more business as usual for us. We've got long-standing credentials running trade missions, both inbound and outbound. So yeah, showcasing the North as a viable destination for global fintechs to expand into, but also bringing fintechs from the North into other overseas markets where they can plug their products and services in. So we're looking to do more and more of those types of international missions. We took a delegation over to Money 2020, Europe's largest fintech trade show earlier in the year, and we're looking to do something similar with Singapore Fintech Festival, which is midway through November this year. So you've probably already seen some marketing going out through our channels. We'll continue to do that. If you're interested in joining a delegation to Singapore, please let us know. And then finally, on the skill side of things, we've really recognized that there's a bit of a gap, a dissonance, if you will, between the kind of the types of students and graduates and indeed school leavers who are kind of looking to get into the world of work, and also a real shortage of people with the right skills to help people fuel the growth of their business. So we've been working with some fantastic academic institutions like Leeds Beckett University, Illuminate Education Group, to help bridge that gap between industry and academia. And there are various opportunities going on at the moment to get involved in that work. We're on the lookout for people to come and support us with that work, but we're also helping Skills England with the development of a fintech apprenticeship, so fintech product manager apprenticeship. And as part of that, we're really looking for employers to help us and feed into that. So if this is kind of sounding like it's in your arc and it's of interest to you, we'd love to hear from you. info@fintechnorth.uk if you'd like to reach out to us on that front. So yeah, sorry to kind of take the floor there, but always good to kind of give people a sense of what we're all about as an organization. So I'll leave the presentation there. And at this point, I'd like to encourage our first speaker, Stuart, to kind of join me on the virtual stage. If you could unmute Stuart and yeah, that's it. Lovely to see you. So yeah, Stuart, over to you. Thanks for all of your support. We literally could not do this work without you. Really looking forward to the discussion today, and I'll hand over to you now.
Thanks, Joe, and good morning, everyone. Pretty hard act to follow that, actually, from a very good intro there, Joe. So thanks very much for that. I guess my job here is just to follow on that, really, and just to talk a bit about OakNorth as a lender. And I guess what you saw there from one of the slides from Joe is actually just the kind of strength and depth of northern businesses and that entrepreneurial spirit that and innovation that's really driving, I guess, economies and the region. And I guess we are held up as one of the key innovators and growth centres, I guess, of the country, which is great. So I guess from that perspective, and how does that then link into OakNorth? Well, there's some pretty good similarities, actually. So OakNorth was founded back in 2015 by our co-founders, Rashid Kotal and Joel Perlman. They were previously kind of university friends in their early 20s, started a business which was a business in the markets industry, and tried to scale that business. And I guess through their own journey as young entrepreneurs without much collateral either personally or within the business, they found that quite difficult to scale. And they went around all the high street banks at the time, and they went around a good number of investor conversations. And ultimately, they got some funding. Probably wasn't what they ideally would have liked in the way and form that they would have liked it, to be able to kind of keep plugging away and scale their business. And I guess over a 10-year plus period, they got that to about 3,500 employees and sold it to Moody's Corporation back in 2014. But I guess the genesis of OakNorth was therefore it was built and it was generated from that, in the sense of, how can we as individuals and create a bank that then can really help businesses scale. And I think that's obviously the focus of today. And I guess, to take our own journey, we got a banking license in 2015. So we've just celebrated our 10th year anniversary last week. We've lent just over $18 billion now, and we've grown a business that now spans London, Manchester, Leeds, Scotland, and Birmingham offices. We also acquired a bank in the US earlier on this year to fuel kind of continued growth of our own business. So our strapline is entrepreneurs for entrepreneurs. We think we've got a very commercial mindset to lending, and we'll get into that, I guess, through the Q&A that's to follow. But I guess the real sort of message from today is that, that there are a number of funding sources out there, and OakNorth is one of them, who would love to kind of help and shape and help scale businesses across the region.
Thanks, Stuart, and thank you, Joe, as well. And thanks to OakNorth for sponsoring. I'd like to welcome on the panel now for our discussion, which will be moderated by Feluso from Whitecap. So, yeah, thanks, everyone.
Well, good morning, everyone. I'm Feluso Lagudo, Whitecap Consulting. I lead our commercial due diligence practice. I must say that the topic today on scaling businesses is really close to my heart. At Whitecap Consulting, we support businesses with their scaling ambitions through some of our growth advisory work, as well as buy side and sell side commercial due diligence activity. Today, we have an excellent panel that will be able to share some practical experiences of working within businesses through their scale up journeys. And to that effect, I will perhaps maybe just ask the panelists in turn to just give a bit of an intro to themselves and their businesses. So I'll start off with Sarah, if that's okay.
Hi, everyone. I'm Sarah Ashby. I am the Chief Operating Officer, Interim CEO at Mamas and Papas. Hopefully, lots of people know Mamas and Papas. If you've had a baby, you should. We are the leading UK baby brand business. We are based in Huddersfield, and we were founded in Huddersfield. We aren't necessarily scaling from zero to big numbers today because we've been going for 40 years, but we are on a high growth journey at the moment, and we're just shy of 200 million turnover.
That's great. Then Tom Rayner.
Thanks, Felice. So, hi everyone. I'm Tom Rayner, CFO at Total Fitness. So, my background was actually in the restructuring team of a Big Four firm before I moved over to Total Fitness. We are a leading health club brand across the north of England and Wales, with 16 clubs. We're private equity backed, which usually means that we're trying to grow as fast as we can with limited capital and limited time as well. While I've been here, I've led on refinancings, equity injections, and also a transaction process. And I guess the common thread through all of it, regardless of size of the business, is that scaling is really messy. You're constantly trading off speed against control. And whilst we're a mature business, we were closed for a good 12 months during COVID, if I can use that word. So we're on the other side of that. We essentially went through an accelerated scale up. So I've got experience there, and hopefully today I'll talk a bit about what worked for us, what didn't work for us, and where some of the gaps are for businesses in the north.
That's great. Thanks, Tom. Peter?
Thanks, Faluso. Hi, so I'm Peter King. I'm Director for Business Banking at OakNorth. So work closely alongside Stuart in the debt finance side of things. As Stuart alluded to, we've grown the bank very much on lending to later stage scaling businesses. And then a couple of years ago, we realised that actually there's a lot of opportunity to support scaling businesses maybe at a slightly earlier stage in terms of giving them day-to-day business banking and deposit options with tech-first approach, but with a relationship to go alongside that as well. So we've scaled that ourselves within OakNorth over the last couple of years and support a number of different scaling businesses and the founders behind those businesses. And we'll look to sort of share some insights from that side of things and making sure that you have the right overall banking partnership to go alongside the different funding options that will be discussed today.
That's great. Thanks, Peter. And obviously, we've heard earlier from Stuart as well. So I think perhaps maybe what we do is just dive straight into it, if that's okay. So I guess first of all, just to set a bit of context to scaling businesses in the UK, if I could just ask the panel, kind of, why are scale-ups so important as part of the UK economic growth? And what are the unique challenges from your experience that they face compared to startups or corporate? If I could start off by perhaps maybe asking Sarah.
I mean, look, I think scale-ups are incredibly important in the UK economy today. We are all hopeful that the economy will keep growing, and we are a huge part of that. Certainly from Mamas and Papas point of view, UK is our kind of bread and butter of our market and our customer. So getting the support that we need in order to keep growing from the likes of our partners, OakNorth, etc., has been incredibly important to us. I think it would be fair to say it's not without headwinds at the moment, and I'm sure Tom is feeling the same as me. There are a lot of headwinds in UK from a customer sentiment point of view, from some of the costs that we face. I mean, Mamas and Papas is part brand, part retailer. So any sort of change to the retail landscape, business rates, minimum wage, all of the great policies that have come into play with the Labour government have really hit us from a bottom line point of view. And we're having to course correct to mitigate that. So there are plenty of headwinds. But we are very positive, actually, about the kind of future and the future outlook. And, with the right backing, the right support to scale, the future is very bright.
Thanks for that. Tom, any thoughts on sort of the importance of scale-ups as part of the UK economic growth?
Not an awful lot more than what Sarah said there, actually. I think it's critical. It's critical for our economy. But also, regardless of size, I think is really important. You might be a large business or a mature business that's going through a scaling period in your life cycle, or you might be a startup. They both come with, but regardless of which end of the spectrum you're at, there's very similar challenges that you'll see, such as access to funding and access to the right funding, which are some of the points and experiences which I'll bring out a little bit later.
That's helpful. And if I could ask Peter and Stuart, if you have anything more to add on the importance, but from your perspectives of supporting various businesses through their scaling journeys.
Yeah, thanks, Faluso. So I think actually Tom hit on a very when he said it was messy, I think that was probably a very good word he used, because actually finance is the easy part to a large degree, and actually it's then the implementation and the execution. So, really what do we look for is always, the management team, because a management team and the strength and the depth and the experience, whether in role or previously, is obviously critically important to actually getting the confidence then to be able to actually execute on that plan in a controlled manner, as Tom said. I think that's probably the single most important thing that we would always look for in terms of from a lender perspective. You can ask for all the data and all the information, but actually it's kind of, what does that really tell us is what's happened kind of in the past and what might happen in the future. And I guess then that then leads on to the big challenge that's out there, I guess, in any people-centric business, which is recruitment, and therefore talent, and getting the right talent in the business to help really grow that. And I guess finally, just actually being part of a business that's growing is actually really good for morale and really good for confidence. And I think most organizations with that culture that talk about growth and talk about kind of developing people and developing process and developing kind of products or solutions or whatever that might be, then actually everybody gets behind that. And I guess from an efficiency and a momentum perspective, that's obviously critical as well from our perspective. So yeah, the finance is the easy bit, is the kind of takeaway.
Yeah, that's helpful. So just if we look at it from a northern perspective and northern businesses, do you think there are any unique challenges specifically, or some pressing barriers, as it were, that northern businesses face compared to other businesses across the UK? Sarah, would you like to?
I mean, in terms of access to capital, no. I think, and certainly sat in a management team, there were lots of trips to London. So practically, a lot of the kind of banking financial conversations are happening, in the capital. So it's quite, from a personal sort of time and travel point of view, quite heavy lifting. But I think just in terms of for business, thinking about business rather than the capital side of it, I think Stuart's point around talent and capability, that's probably the only thing that I find is a difference between North and South, and it's attracting talent, it's retaining talent to be able to deliver, the plan, ultimately the management's plan that they need to deliver on, and create that value. I mean, I'm fortunate, I've got a brilliant team around me, and I feel we are able to attract it, but the pool is somewhat smaller.
To add to that, Sarah, I couldn't agree more. With our 15 clubs, each area has got its own nuances in terms of the local market, local competition. But the commonality between them is we need the right talent in that location. And also, when we look at a rollout strategy of new sites or different products or services, it's really important for us anyway that has to be in the heartlands of where our clubs are. We need it to be close enough to where we've got a core and established team, just because of the sparsity of talent across the north.
Yeah, helpful. And if I could ask Peter and Stuart, from your perspectives, obviously you support businesses right across the UK. It'd be interesting to get your views on that sort of northern context of businesses versus the rest of the UK as well.
Yeah, absolutely. In terms of, I think Sarah's point around the fact that the majority of the conversations often happen down in London. I think, we hear that, or I hear that a lot from businesses that are based in the north and outside of London and the capital. So that is certainly, I guess, a logistical challenge, but it's certainly not something that can be, is not a hurdle that can't be beaten. So, I think that's the main challenge. And I think in this depends the type of industry from a talent talent perspective as well. So, there are certain industries where obviously talent can be more remote, and then it does mean that businesses can access talent with a wider pool. But then there are certain industries and the likes of Tom's are going to be more. They're going to need sort of talent there and then where they're based. So it can be industry to industry as well.
Yeah, very helpful. So if we now turn the conversation a little bit to just looking at access to finance and sort of exploring the growth journeys. I think Sarah and Tom, it would be nice for you to share some of your experience of that scaling journey and sort of bring it to life a little bit for our audience. So if I could ask you first of all, sort of what were the sort of critical moments where access to finance really made a difference through your journey? If we could start off with that, Sarah.
I was going to say Tom should go first this time. All right, sorry, Tom. I'll go first again. You get to go first time next time. So look, Mamas and Papas is private equity backed, a bit like Tom's situation. Blue Gem Capital Partners have owned us since 2014. So read into that what you will. It's a long hold. And throughout that journey, clearly the private equity firm have been considering different strategic options. And as a result, we have had to flex in terms of appropriate capital structure at any one time. The business itself, since 2019, when there was quite a tricky time, actually, Mothercare went into administration and Mamas and Papas did a pre-pack. The business has gone from strength to strength and actually doubled in terms of top line growth. And it's fair to say we are a very cash generative business. So the kind of need for capital to invest is less of a problem for me day to day and a headache, but the need to fulfill shareholders' own sort of strategic objections is probably more the motivating factor when I'm looking at funding options. So July last year, when I was the CFO, we completed a refi. We raised 15 million with OakNorth, which served a strategic purpose with our shareholder to sort of repay some loan notes to them, which was good. But as part of that, what I really welcomed with OakNorth is the flexible funding option route that we were afforded, which was an RCF, because I'm always a big fan of having a buffer just in case on a rainy day things don't quite go to plan. So OakNorth were really flexible with that, which was super. And that's kind of the structure that we've got in play today. But the majority of our capital structure is still in the form of equity, with our main shareholder.
That's helpful. And Tom?
Yeah, and well, in terms of critical moments where finance made a difference to us, it was huge for us. So when we were going through our accelerated scale up and scale up in the truest definition there after COVID, because our cost base stayed the same, our membership had reduced by a third during COVID. So we needed to get those members back, and we were growing particularly quickly at that point, given the kind of renewed value that the UK saw in health and fitness coming out of COVID. And we were funded by our incumbent funder was a clearing bank who was incredibly supportive through COVID and what the business needed then. But we found as we were really growing the top line in a short space of time, that relationship was becoming a little more of a constraint than it was a partnership. We were spending more time answering queries of the incumbent bank rather than running the business. And then the next milestone, I guess, where finance was really important to us was our facilities were about to expire. So we were going to do a full refinancing process. We emerged in partnership with OakNorth, and that move gave us such speed and flexibility. Sarah mentioned the importance of flexibility for her. It meant that we could align our financing with our growth plan. Instead of being boxed in by our past performance. It was more of an alignment going forwards, and that was really a turning point for us when capital stopped being a drag on the business and started enabling opportunity for us.
Really interesting that you mentioned that, Tom. If I can just ask you just to expand a little bit on different financing options that you considered through your journey. Perhaps maybe looking at equity as well as debt funding options. How did you go about that? And it'd be nice if you could just share a few thoughts on that as well.
Sure. Well, I guess equity is the quickest answer when looking for our business being private equity backed, when we're looking at funding. But we're really conscious equity is the most expensive form of funding for a business, and it dilutes and comes with increasing control. Debt obviously is cheaper than equity, but it demands a certain level of predictability for the business, which is a tough ask when you're scaling a business. Predictability is just really difficult to obtain. So for us, the right path in terms of funding has always been a bit of a balance. We need enough equity to weather the inevitable volatility that all businesses come across, but then enough debt to fuel our growth, really. So the question that we regularly asked ourselves throughout the kind of life cycle of the business is often, do we have the confidence in our forecast to take on debt? Do we know that we're going to have predictable revenues? Do we know that we'll be able to mitigate risks that are going to come our way? And when you've got answers to those questions and you've got the balance right, then you can start the journey, if you like, and make sure that you've got the right ratio of debt to equity for your situation.
Just building on Tom's point, I think he's absolutely spot on, and it's probably something that people, certainly CFOs, should be really thoughtful about. When you're taking on debt, you've got to protect the downside. You've got to know you can protect the downside, because that's what ultimately is your job to do in that situation. When it's equity, it's all about the equity story and value creation, and the two are somewhat different. So when you're looking at raising both, you've got to be on your A game to have both those stories. So can you mitigate risk and protect downside and fulfill all the obligations that come with covenants and raising debt? And on the equity side, can you sell a dream and a big cash on cash return, dividends potentially? It's a juggling act to be able to display both, I think.
They're very different conversations, aren't they?
Yeah, you've got to kind of put different hats on for each.
Yeah. No, that's really, really interesting that for you to share that and share the differences really between that. And if I could just maybe just a point on that, sort of looking at valuations today and in the current market context, any perspectives, any thoughts that you feel in terms of the use of debt and equity in that way, and kind of where you feel that perhaps maybe the focus for growing businesses might be to look at, given the current sort of perhaps pressures on valuations today.
So you go first, Tom.
That's a tough one, Felicia. Well, I guess it's really important to look what's going on in the market and what you think is going to be happening in the next sort of 3 to 6 months. And you'll look, if you go out and talk to people in the market, you're going to get as many answers as you ask questions, as many different answers as you ask questions in terms of what's going to happen with the economy. But it's going back to that point in terms of risk mitigation. The right balance for your business on debt versus equity is going to be the balance which means that you can withstand shocks, because the shocks are coming. No matter the size of the business, there's always going to be a challenge there. And if you have the confidence or the buffer that from a debt perspective, you're going to be able to weather those storms, and from an equity perspective, that you're still going to get to where you need the business to get to on the upside. Then that's really how you can determine the right mix for you.
Yeah, and I agree with that entirely. And I think, look, it varies wildly depending on the sector that you're in terms of appetite on debt and equity. But my biggest piece of advice is just make sure whatever capital structure you put into place, you can afford it. You can afford to fulfill the obligations of that capital structure, but also, most importantly, you can deliver on what the future plan is for the business, and actually you can fuel growth and scale up. You've got to be able to balance both. And I think more often than not, people end up agreeing to an unaffordable capital structure, and that's where they end up in problems.
That's really helpful to highlight that. If I could just turn now to the OakNorth team, just getting your perspectives on how you see the needs of scale ups differing from traditional SMEs. When it comes to lending or financing requirements. It'd be good if you could just give us some context from what you see. Should we start with Stuart?
Yeah, I'll cover that one. Thanks. So I think actually what Tom and Sarah both said there is flexibility, and I think that's absolutely critical. Not, if you think about both of them being kind of consumer businesses, then actually how has that landscape changed? And when we think about doing a 5-year funding facility, then is that plan really set in stone? Probably the next 12 months might be 2 years, you might have some visibility on, but beyond that, then it becomes a little bit more fluid. And so over the course of a relationship and a journey, then things change, and I guess that comes back to that flexibility downside, kind of having a look at what works today might not work. It could be an external shock, something like COVID, or actually could be changing consumer preferences or whatever that might be. Technology, I mean, AI, everybody's focused on AI right now and how that's going to kind of either help or hinder certain sectors and certain businesses. So I guess you've got to be on your toes. I guess the other thing to think about is that dynamic around equity and debt and where you are in the journey in terms of if you are building a product and building IP and building a customer base, then, do you want to give away too much equity too soon and therefore lose control of the business, or that strategic direction and that kind of that way forward that you see it? So there's always challenges when scaling a business is on a number of fronts, and I think it's just making sure that, like, the well thought out, the best plans and the best, I guess, as we call them, credit applications that we see are the ones that are well thought out, well articulated, have got a range of scenarios in there, and not just coming with kind of one, this is the golden bullet, this is what will get us from A to B. And when you can kick under and get really under the skin of that, you can actually see that there's levers to pull in a business, and actually there is that flexibility, and I think that's what it comes back to. So I guess from our perspective, that's what kind of we'll always look at management teams, we'll always look at cash flows. We're a cash flow lender, so we'll always look at cash flows, and then the third pillar really that we focus on is kind of what makes the business different, unique, stand out, be top quartile. And that can be customer service, it can be, product IP, it can be market share, it can be anything really. But it's really hanging on, which are the businesses that will succeed against the competitors, because to a point on valuations, they will attract the higher valuation than the norm. They'll be the most attractive. And I guess just if you just touch on the actual funding landscape between debt and equity, there is a lot of debt providers, there's a lot of equity providers, from early stage VC to lower mid-market regional firms to more national firms. As you really scale the business, then you probably want a slightly different equity holder as well as you go through that journey, and they tend to pass over on periods of time. So I guess the biggest probably challenge for most equity holders in the market right now is actually exits rather than deployment. There's a lot of great opportunities to deploy new money into new opportunities, but actually achieving the exit is the bit that's kind of dragging that funding market slightly at the minute.
No, that's really that's really helpful. I think we've got a couple of polls coming in, but we'll let that carry on. Just on the carrying on the the options that you explained there, Stuart. It'd be interesting just from your perspective if you could help us with just highlighting some of the differences of the sort of options that OakNorth offers compared with traditional banks. It'd be good if you could sort of help sort of highlight perhaps maybe some of the differences there.
Yeah, I'd love to say we've got a whole big shopping list of products and services that we can offer, but generally we have three. We have a term loan facility, we've got a revolving credit facility, and through Peter's team, we've got a business banking account now. So I guess when we're talking as we've gone through, what actually, when you've only got two products and being candid about it, we're not the cheapest on price, then what do you need to offer? And again, we touch back on flexibility, we touch back on actually building a solution that works for the business rather than a solution that works for the lender. And clearly, there's always got to be a balancing out there in terms of getting it right. But actually, that's where I think we generally win against our competitors in the market. And when you overlay that with kind of transparency and speed of execution, then that really helps us, that's really helped us kind of grow our business year on year. I think actually what that does do, and is that I think now the most recent stat I had was that kind of 40% of our clients this year are repeat clients. So it's that kind of really continuing to grow and help businesses grow and kind of continue that follow-on funding that we talk about that gets them to a stage and then actually go again and again and again. And so I think that's where we're really kind of different versus our competitors who might be a little bit more rigid on a credit process or a more general lending type process. And that served us, great. I guess the other thing is kind of the innovation, and Peter might just touch on kind of the standing start to building a business banking product for in the last probably 12 months, Peter.
Yeah, absolutely. Exactly what you said. We're sort of trying to mirror what we've built the debt finance side of things in terms of it being technology led, but with that relationship and that innovation to go alongside it. Because scale ups in their nature are complex, whether that be through the different funding routes that they've gone, they'll have a complex structure often. That structure doesn't stay the same, it will change quite regularly. So from that perspective, the banking landscape out there is great there's lots of options out there for the S of the SME, in terms of lots of great fintechs out there that support sort of startups and early stage businesses. But then when you get to the complexity of a scale up, you then tend to have to go and bank with one of the large incumbent banks. Their innovation, their technology is going to be more legacy based, and unless you're a larger corporate, often the relationship might not be there as well. So we've tried to marry the sort of the two of those up, to offer that sort of scaling relationship and understanding that a business is going to grow, is going to change, to then sort of go hand in hand with the debt approach that Stuart's alluded to.
Oh, thank you for that. Yeah, just carrying on from the whole discussions we've had around the importance of partnerships and sort of banking relationships. If I could turn to Tom and Sarah, just through your journey, just help us. I know we may have covered some of this, but if you could just highlight for us what you found to be most valuable in your banking partnerships, as you've scaled the business?
I'll jump in. So for us, it's been really important to us to have a bank that looks forwards. I mentioned before about the incumbent lender, looking backwards, and a lot of lenders out there kind of just underwrite last year's accounts, but scale ups, us, most businesses, we live in the future. So we need a funding partner that's looking in the same direction that we are. And I talked about in terms of your plan, having enough buffer to withstand shocks, but also you need your funding partner to understand that those shocks are coming as well. And I think it's really important that as part of that partnership, you're regularly talking to your funding partner, because as Stuart mentioned, your plan evolves after 12 months, 18 months, whatever, it's moved on. Those conversations become much more natural and much easier if you've talked about the challenges and the opportunities all along the way. So you've got that alignment there. And the final thing for me that was really important in terms of a funder business relationship is responsiveness. If something happens in the business and you need a deal that's going to move in weeks, not months, then you can't afford a bank to be tied up in process, because you might have missed an opportunity, or something bad might have happened. So yeah, those three things: looking forwards, absorbing volatility, and responsiveness.
That's great.
The only thing I'd add to that, because that's a very, very comprehensive summary, Tom, is I think picking a lending partner that is of a similar size, scale to your own business, and fine if you're a small business, clearly that's not going to be as relevant. But from my journey with the choices we had like a plethora of choices and some really big high street names, but actually we purposefully chose OakNorth because it felt they really wanted us. We really wanted to work with a partner who wanted us, and that's really working very well for us. I feel if I'd gone with one of the massive names, I just wouldn't be getting the account management and the attention that would be as helpful.
Oh, that's helpful. And just in terms of of sticking on that point, I don't know, are there any other sort of advice that you could give scaling up leaders, or founders and leaders in scaling up businesses, on how to go about sort of getting the most out of the relationships with a banking partner?
I'll jump in. It's a rule for life, really. The best relationships are built on no surprises.
Yeah.
So if your lender only finds out about challenges when it's too late, then you've already lost trust, which is why the importance of talking with your funding partner until you're blue in the face. It helps both sides. So I think you can get the most out of a relationship just by regular dialogue, and regular alignment.
Agreed. I've spent quite a lot of time either doing dinners, networking, etc., with OakNorth, obviously joining stuff like this, but also getting OakNorth to come to our stores, come to our head office, like understand our business, come and see the guts, and then you'll really know what the numbers mean.
Yeah, no, that's very important. Peter, just on from your perspective, it'd be nice if you could just give us your view in terms of that whole thing about scaling partnerships from a banking perspective, and particularly how you see it as you work with clients through that scaling journey. It'd be good if you could just bring that to life a little bit with some of your experiences.
Yeah, absolutely. I think the scaling businesses are no two of them are the same, but their journey means that they need someone that understands that tomorrow is going to be different to today. So we build that sort of that banking support to go alongside the funding options that Stuart's mentioned, around looking forward, making sure that the technology means that businesses are not calling their bank for queries or reliant on actually it slowing them down as a business. So they can actually speak to a bank around more commercial conversations, whether it be Tom opening a new site or whether it be, we're looking to expand into a new market, etc. That's the sort of thing that you actually want to be having a conversation with your bank about. And then also understanding that complexity that I alluded to before, as things change, a restructure comes in, new equity partners come in, whatever it might be, and the business sort of changing as a result. It's about, us as a bank and understanding that, so that there are no surprises to allude to what Tom mentioned as well.
That's really helpful to understand that. I have a question which is just coming from the audience, but actually is related to my next question, actually, which is really all about how OakNorth manages being tech first and relationship while still being innovative. And so that's the question from the audience. And the ones that we were going to ask anyway, which I think is related, was really about how OakNorth balances being a tech-led bank whilst also providing sort of human centric expertise. Be helpful just to get views from Stuart and Peter on that, if that's okay.
Yeah, I can quickly go first, and I'm sure Stuart would give a great point from the lending side. I guess from just an overall piece, technology is there to make things quicker, to make things smoother, so that clients can then ultimately see the benefit of that. However, it can only go so far when you're dealing with more complex businesses, when you're dealing with businesses that aren't the same every day. So the relationship piece there is understanding around that, whether it be in building products. So we're always, building products for our clients and for our prospective clients. So that relationship comes key into that. And I think because of our genesis as a bank and the fact that we're founder led as well, that's why we sort of build a network to sort of try and connect the dots for our customers as well. So as Stuart alludes to, we haven't got the widest network of products, but what we do know is that we have a wide network of other partners that can maybe assist over and above, and sort of connect the dots in that sense. So whether it be through particular events similar to what we're doing here today, that relationship piece is sort of very much focused on where we can add value over and above the particular products and services that we're supporting, which are tech enabled.
I think the only point to add there is just about data. I guess, you've got Tom and Sarah on the line who will use data massively in their organizations, at a very granular level these days as well, that probably 5 or 10 years ago was kind of, they probably had the data, but were they really using it to drive the business forward? So actually the tech and the innovation helps you collate and collect and I guess analyze, and then it then allows the guys there to make real kind of forward decisions based on kind of what they're seeing and validate some of their investment decisions and scaling considerations that they're thinking about. And I guess that's probably changed quite significantly in terms of the way that you kind of manage the business. This question for both of you really over the last, certainly over the last few years anyway.
I think it's the data's still there. Whether the insights are there, I still question. But we're on the journey, Stuart. You're absolutely right. The tools that are available to turn that data into insight are massive. They're everywhere. Actually, it is certainly our kind of future growth strategy is all centered around data and how we harness it more. So yeah, more to come. But
it's been really important for us that OakNorth understands the importance of data, because you might be sat there in a smaller business who you're not ready, you've not got the data infrastructure set up, and to get that set up, it comes with a cost. You're going to have to invest in your business to get it there to drive that growth going forwards. So you need a funding partner that sees the importance of it, so that when you're investing your limited supply of capital into improving tech within your own business, that you've got that support and you're not butting heads and there's no bureaucracy there.
No, absolutely. Really important. If I was just to turn back to the OakNorth team, just on that technology front, and just ask you as to how technology really plays a role in terms of how you make your sort of lending decisions and being more dynamic and tailored to support different scaling businesses. We welcome your thoughts on that.
So it's actually it's as much data as it is human, and I think that's still the key component that OakNorth does that's different, very different than the market, because we invite all of our borrowers into credit committee. We use it as an inclusive way of getting to know the business, building a partnership, asking the key questions of management, and really seeing, I guess, the whites of the eyes. Is, can you answer the question? Are you really in tune with your business? So that side of it is still very traditional. And, I guess if you'd have gone back, 20, 30, 40 years of going to the bank and having a meeting and sitting in front of the bank manager who had a stamp that said approved or not approved, then, that's there's still a bit of that mentality there. But the data and the innovation and the technology helps you get that kind of the underlying data points in terms of the business, the metrics, the KPIs, whichever you want to call it, that drive that kind of decision making. And it allows you to put that, front and center, and actually be able to draw out some of those questions that you can then pose to management to say, actually, what do we think about this? Or what do we think of the competitive set out of the market? Or, where are the challenges, but also where are the opportunities? So it's very much 50-50 from our perspective in terms of how we approach lending. But ultimately, as we try and scale our own business, then you kind of want to be able to do that based on a very strong technology platform that allows you to scale quicker and faster, because we have our own shareholders, investors, and our own co-founders, and they clearly want to continue to grow the business as fast as they can.
That's really, really helpful. We've only got a few moments left, so I think we probably look to try and sort of just recap on a couple of things, some key takeaways, I guess. So if I was just to go around the panel and perhaps maybe just ask for you to give me some of your top, say, 2 or 3 things that you feel scaling businesses should get right before approaching lenders or investors, what would they be?
Do you want me to go first, Tom?
Go on then.
So I think getting your house in order before you start any process is really key, because don't underestimate how much of a distraction it can be. I can't remember, Stuart, I think you said the finance part is easy. Christ, it's not when you're in the management team, because you're doing it on top of day job. So, making sure the data is all well filed, ordered. I think if you haven't got extra support and resource, think about that in a finance team. There's lots of people who, find their careers cycling through these types of activities if you're a larger business. So yeah, just have the house in order, both from a data and a resource point of view. Have the growth story clear as well as the downside, protecting the downside story. And, as we've kind of repeated a few times, really make sure you pick a partner who's going to be right size for you, who's flexible and wants to get to know you and like you as a business.
Three from me. The first one is the same as one that Sarah mentioned around having a clear growth strategy, know how you're going to grow your business and make sure that there's evidence behind it. Secondly, make sure that your financial model pulls that or weaves your strategy through it. You're not going to get very far as a scaling business if you've got a strategy over here and a financial model over here, and they are 2 separate things. And then thirdly, from my experiences, making sure that both you and the rest of your management team can clearly articulate the strategy independently. you need to not just present the numbers. You need to own the numbers and articulate the thought process behind them. And if you've got those three things, then you'll end up with the right finance in the right amount of time as well.
That's really, really helpful. And can I ask from a sort of lender's perspective, what your advice would be as well? Stuart or
I
Peter?
think they've touched that. I think it's be prepared, be articulate, and I guess then during the journey, it's just the communication because we expect a bump in the road somewhere. So we don't expect it to go ahead of plan and always to plan. There's plenty of examples where actually businesses have had that bump in the road and come back stronger for it because, again, COVID is a great idea, a great sort of example of businesses pivoting and being innovative and finding new ways and actually finding new markets in some instances to really kind of turn the business, scale the business. So there's opportunities in kind of in challenges as well, and I think that's the main bit. But that communication point is absolutely critical because if we know what you're thinking and where it's going, then it's a lot easier and quicker for us to react on and be able to make decisions, which ultimately enable management teams to really execute on them.
No, that's really helpful, and thank you for those. I think we're just on time now, so I'd like to just take this opportunity to say a big thank you to my panelists. Thank you for all your inputs and contributions. I hope everyone's found this quite a very insightful discussion, and how we support businesses with scaling smart. So thank you, everyone. Thanks you to the panelists. Over to Rachel.
Thanks, everyone, and thanks, Feluso, for expertly moderating that discussion. Thank you to everyone who joined the panel for sharing your insights and to OakNorth for sponsoring. I'm just going to quickly share my screen. My colleague Ryan has been putting some of our events into the chat to let you know what we've got coming up. But just to flash this on screen, we've got several more events taking place this year that we'd love to see our community coming along to. And yeah, in terms of this webinar, it's been recorded and will be up on our YouTube shortly. We'll also be producing a post-event write-up, which we will circulate with our community as well. So keep an eye out for that. And just one last thank you to everyone who was involved today and everyone who came along and watched the webinar. And I hope you enjoy the rest of your afternoons. Thank you, everyone. Thanks.
Thank you.